What's up, everybody? Bueller here again, and today I'm going to be finally adding into the Buy the Dip Strategies playlist. Been getting a lot of requests to post another one of these, and basically we're going to be covering the same info, as the other ones. It'll just be another setup here. But here's a good live example today that we took in chat. First, I want to start off with the post, and then we can get into the chart. Therefore, you get kind of a description of everything and everything the timing had. But here's the daily watch list I posted today: SPY, NVIDIA, AL, BAC, Tesla, Square. I normally post longer list than this. I just wanted to kind of go with today's list with a couple of tickers I liked. AL was from my weekly watch list. NVIDIA, probably my favorite tickers, NVIDIA. BAC to get a bank in there. Tesla, of course, that's a fan favorite. And then Square. Square's always looking good, especially right now. They have very liquid options chain. But what I want to talk about is the potential dip buy we talked about. So we talked about it here at 9:39 a.m. Central Standard Time, and at this time we had posted the low. We had a reversal after, and most of the time after this. So basically, in short, in this strategy, you're looking for one dip. You want to see a rejection, and then a second dip. After the two dips, the two lows, whether it's a double bottom perfectly holding the same level, or a low and then a higher low holding like this at an angle, either way, you want to see that. That is what we call the base build. After that, you want to see an increase of volume and a candlestick close over the 9. You had one here as well, but this didn't really have a good base build. This is just one good low picked up. Normally, the first one will get rejected. I'm not going to say every time because nothing works always. I would say this is over 80% accurate. That this will get rejected on the first go. So if you do see it go, consider it parabolic, but where you're targeting is the opening price over any significant level. So right here being the pre-market low area, you'd be looking over that for a scalp. But overall, what we're looking for is a base build. You want to see a good rising volume close over the 9 EMA, exponential moving average. The 9 or the 8 EMA, a lot of people use. I personally use this. I've been using this for years now. I got it from a guy named Steven Bigelow on YouTube. Shout out to him. I don't even think he knows I exist, but his channel is really cool. He talks about it a lot, and I thought it was really cool how he compared it with candlestick patterns, because I also look at candlestick patterns very heavily. And right there, you can see we got a very good push over the 9 EMA and a good rise in volume. So that's potentially what we're looking for in short for a good buy the dip strategy. And then targeting other significant levels like our pre-market low, opening price, so on and so on. But let's move on. So there was the original post at 9:39. So let's go to that. There at 9:39, that's this candle here, right before it was closing into this one, or this was right as it was closing, and then we ended up getting the push afterwards. And where did it go hit? Past pre-market low, these two areas here. I have it marked twice because the true pre-market low and then kind of the more recent one that kind of happened here. It's also another level. Why I have this one highlighted is it's the previous day close. It's another good pivot point. Again, check out the other playlist on the channel before diving into this. Definitely would start with TA routine, BB system, and then getting into more of these videos. But your main target is always going to be that opening price. It ends up going towards that perfectly. Very good take profit spot here as you get your first inverted hammer or even shooting star candlestick, and then you have getting a second one against the same exact area. So very good time to point out that the overall trend might slow down, not even just short term like you see in these two moves, but overall for the rest of the lunchtime or even the rest of the day, it might slow down. So it might take another hour to hold the support before continuing onwards, but that doesn't matter. What we're focused on is the low being made, the price getting bought up over the 9 EMA after our base build is complete. So step 1, step 2, and then trying to hold towards the opening price or other significant levels. Like I said, if you take some initial profits here, you're definitely not crazy. Don't think that you're being too early. Definitely take baby steps at first. Take a lot of your profits here. Try to take some here if you can. If you only have one contract, definitely take them at that first area. You don't know that it's going to continue onwards. This is just a very high probability strategy. Again, so what you're doing here is you're buying before a lot of people. So you're going to have really good options pricing as long as you're entering correctly. You're not waiting too long or hesitating. Because by the time this candle opens, options pricing is going to start jumping a lot. So it's going to start messing with you. So you're going to think that you're missing out on a lot. But let's continue onwards. You can see target price open as long as low of day holds. Levels above are the pre-market low and the open. Below is the low of day and the 387.65, which I'll show you where we get that from. Why it's highlighted orange is because I posted all these levels last night. This morning, the only level that we added was this one. It's because I didn't like the range between 386 and 390. It was just too big. I was like, there has to be something in between here. It isn't just nothing. And I didn't want to just add the previous day price action because it is kind of an easy level to grab here. But there's a few kind of eaves there, you know, a few hills before that one, before it truly started going up more. So I didn't want to just grab that one and say, I think that's it. You know, so I wanted to go and grab a real level that I knew was there. So what I did is I went back to the far left, and a lot of these are just emerging candles that I have grabbed, the tops of buyers on the 4 hour. And what I did is I went back and I found that this reset candle was in between the area I was saying had a big range. So I just added the support of that candle because it was basically just an in-between sandwich candle before continuing higher. So I just added the support of that, and that's all it was. Highlighted it orange so people saw me add it. But yeah. So we ended up posting that as the support. Considering everything did look kind of top heavy because everything was rejecting the trend line, we broke out before opening price. And then as price opened, we were opening right there as rejecting points. So, you know, bulls could have taken it just as easily as bears from open, but bears ended up taking it straight down to that 387.65 area that we just mentioned. And then that's when that base build started coming in. So I wanted to make this video just to kind of go over it because we haven't posted a good buy the dip strat video in a while. But basically covering the same info. And you can see just one contract made 16%. We actually didn't get filled where we wanted, and we got more. It was about 20%. And then you can see Fantastic John followed me here. Pretty cool. He ended up buying as he saw it on support right here. Same time, 839, 840 area, or 939, sorry. Ends up pushing up over. Ends up taking profits at not just the old PML, but also almost opening price, which is way up here, but we're going to take our profits, be passive, especially on markets like this when everything's kind of if, ands, or buts. You know, there's not really any confirmed movement yet. If you go over to the big time frames, what I mean by that is we're indecisive. You know, we have pushed up perfectly into this gap fill here. Let me show you a cleaner chart. We've pushed up perfectly from this gap and closed it, filled it, you could say. So it is very 50-50. If we end up holding support here, we definitely can go up, reject this part of the gap, go fill this secondary gap, and then truly have a slowdown. So what you're going to want to look for are gap ups to smaller candles for slowdown in buyers. For a slowdown in bears, if they end up taking this downwards again, you want to see if they end up holding support here at 380 or if they end up holding the support here. So you have a couple supports you can look at from recent and from before that price can try to hold on long term. You could also set a fib if you really want to from the low of the range up to where price is currently trying to hold. And you can see there is actually a heavy amount of support in this area between the 50% control point and the golden pocket. So there's a few areas you can look for bears to take back control. But initially what you're going to want to see for bears to have a sustainable move is a slowdown into a bigger leg up if they don't just end up continuing onwards there. But a few things you can look at. And then all these levels, like I just said, are again just from the TA routine, going to the 4 hour and the daily and just grabbing tops of buyers from the far left. Like a book, you read left to right, and it helps us out on the smaller time frames. So hopefully you guys enjoyed this video. I know chat definitely had a lot of fun today going over the different examples. We also walked SPY. Here, I can just do this. I also walked SPY for the most part today. Alright, it doesn't want to do what I want. Alright, whatever. We end up posting question of the day. What candlestick pattern is the most recent one I have highlighted here? You know, we like to ask our members questions, hopefully giving them a chance to answer it on their own. Inverted hammer, I'd also take shooting star as an answer, potentially showing a slowdown at resistance because we're at those next bigger time frame levels and a seller's candlestick is popping up indicating, hey, a slowdown might happen. No, we're not saying this is going to send us to zero. We're just saying from this recent pump, it's definitely going to slow down a little bit. And that's what we ended up getting. We ended up getting a slowdown, hit it again, slow down, indicating that since we can't pass over it on this third try, that we are going to most likely slow down on the trend and need to test a more recent, more sustainable support, which is about right here actually. So again, helping us out, again, just marking our previous day close, previous day open, pre-market high, pre-market low, adding our today's open, of course, as another significant level to add. Now it's significant even more because we've not just opened there, we've reached back up there and rejected it 3 times, just about. So very, very significant for bulls to try and get over, very significant for bears to keep rejecting. But hopefully you guys enjoyed this video. The big point of this was to cover the buy the dip strategy, but it's also kind of nice to look at the overall market and just see how easy it can be, again, by trusting the process and adding levels that make sense. Again, every single level at any time, any one of my members could say, hey, how'd you get that? And I could go highlight it, I could go find it, and I could point out exactly why I have it marked. So if you can't do that, you're not adding levels of effectiveness, I guess. You know, you want to have levels that are very effective that you can trust over and over and over and over and over. So hopefully you guys enjoyed this video. Please leave a like on it. I'll see you guys on the next one. Thank you again.